All right, good afternoon, everybody. Welcome. My name is Don Kaufman. We're going to get started here momentarily. Do chat in. Let us know that you hear us all right, see us all right. Well, you don't see anything yet. I'm just checking. I'm making sure I'm all good to go. Yeah, looks good, sounds good. Okay, cool. All right, feel free to chat in where you guys are joining us from today. I'm just curious, my own curiosity. Just curious, what part of the heat wave are you guys in? Right? That's all I've heard lately. So I go between Arizona and St. Croix in the Virgin Islands. I'm in the Virgin Islands right now, and all I've been hearing about is people complaining about Arizona. Look, you signed up to live in the desert, all right? That's what you get. So Northern California, awesome. Okay, is that Saskatchewan? People live up there. Okay, all 8 people, and one happens to be a moose. The Awesome. So cool. I'm just waiting for everybody to kind of chat in a little bit here. So let us know that you're all right. See us all right. Hear us all right. Fantastic. So cool. A lot of people from the Northwest coming in here too. Awesome. Well, with that, welcome everybody. By the way, feel free to chat in at any point today. These are not rhetorical questions. People always ask, is it live? It's live. How live is it? Well, it's live enough that I'm watching markets here. So it's an interesting day. CPI report actually, skyrocketed the marketplace, but we've actually fallen back. It's edgy right now. I can feel it. I can taste it. I can almost touch it. Like it feels edgy, but volatility hasn't really picked up at all. So we'll kind of play wait and see a little bit here on today's trade. I couldn't tell you today whether we're going to bid back up or fade heavily. Edgy, again, very, very edgy trade inside of today's markets. So with that, again, welcome everybody. Today, we're going to be talking about Ultima Alert. Again, my name is Don Kaufman. This is a high probability income generator. You are watching a TheoTrade presentation. All right, risk disclosure. This is mine. This is not yours. Okay, no feeding the monkeys as well. Look, I spent 15 years in the brokerage world. I have been out of the brokerage world now for a decent amount of time, and I like it, I tell you, but I always throw up the risk disclosure because I am no longer a financial advisor. I am no longer a broker dealer, and I am thrilled about it. Free at last. A couple of housekeeping items. Look, I'm going to go through a tremendous amount in today's session. In fact, I was adding slides until like 1 second before we actually hit start here. So if you've even been to this presentation before, yeah, you're actually going to pick up a little bit more. We've also we've changed things up a little bit here at TheoTrade. Well, changed up a lot here at TheoTrade. So I think you guys are going to get a tremendous amount out of this. Pay attention, shut the door, turn off Skype. Anybody use Skype anymore? I do. I use Skype. I like it. Skype chat, whatever else is distracting you, close Facebook. Nobody needs Facebook. Okay. Nobody needs Twitter. Phones on silent mode, definitely kick out the kids. This is where you can say, children, okay, you're out of here. Anyway, you took the time to be here. Focus, because you're going to need it. I'm going to go through a huge amount today. At the end of this presentation, I will provide you a link at the end of the presentation directly to our expected move indicator. If you've never heard of the expected move indicator, it's literally an indicator that has changed the way that we view markets. What the indicator basically breaks down to. By the way, I'm not big on screenshots. Guys, if you don't know me at all, I'm not big on screenshots. I like to use live markets, right? If you look at something like Apple, okay, you look at like auto expected moves. What expected move does, it's how the option marketplace is handicapping risk. So when you break outside, there's like 3 lines in the screen. I'm going to zoom in really, really tight, right? If you take a quick glance at this, you say, all right, look, that's a huge breach to the upside. A breach, okay, is of statistical significance. There's a million different things you can use this for, but these lines are the way that the option marketplace handicaps risk. And when we breach outside of those lines, it's like the option marketplace is saying, I'm wrong. You want to know something really, really surprising? Another way you can use this indicator. Did you know Apple is down? And Apple actually already touched, it's down on the week, not just down on the day. Well, on the day it's massively unchanged, but on the week it's down. And one of the most interesting things, Apple actually touched to the penny the lower edge of its expected move. and actually rebounded off of it. But wait, there's more. You see the exact same thing inside of Google, touching the lower edge of the expected move. Let's go over to Microsoft. Microsoft touched the lower edge. You'd be shocked to know that Microsoft is actually flat on the entire week. In an instant, though, it gives you so much information. Anyway, when I talk about the expected move indicator, it's our gift to you. You have to stay with me right until the end of the presentation. It's a $500 value that we give you, and it's just an indicator that we use incessantly. Every single video that I do that would be on YouTube or something, I talk about expected move. I think it's incredibly insightful. I think it'll help you a tremendous amount in this marketplace. All right, onward and upward here. This is why you're here today. So we're going to talk about Ultima. Okay, Ultima is not ultimate. We're going to talk about Ultima trades and Ultima alert. Ultima alert is literally me trading, okay, and firing out alerts in real time. People, look, I'm going to just tell you right up front, okay? One of the things you're here to learn about is what Ultima is. What we do here at TheoTrade, okay, is not just education. And I like to tell people this right up front, okay? We're not just education. We trade live. We show you everything. We're a complete open book. One of the most important things that you can learn here at TheoTrade, okay, is everything that we do is completely open, meaning you can see every account balance, you can see profit, loss, okay, the winning trades, the losing trades, you're going to laugh, you're going to cry, but it's no holds barred approach. Today, specifically, we are going to talk, in fact, about Ultima. So why it's so ideal for the current environment. You're going to learn a trading symbol. And in fact, I'm going to talk about the trading symbol in just a second here that is used by professionals every day. You're going to learn where and find, defined edge as a retail trader. And a lot of people don't really know what edge is. Like, how do you make money? Okay. You're like, I buy something and I hope. That's not edge. Buy something and hoping ain't edge. We're actually going to show you what edge happens to be. We're going to talk about the benefits of high probability trades, but more importantly, okay, how to reduce risk if you're wrong. You're going to find what products are viable. When I say products, okay, I mean like Tesla. Okay, Tesla's a product. I don't really care that it's Tesla, the company. We're traders. Okay, we don't really, oh, I really think that Tesla's making a wonderful car. Okay, this is not CNBC. You really want to learn what trading is. That's what you're here for today. I'm not picking on CNBC. Look, they got to make, 8-10 hours of content a day on there, which is crazy, but you're not going to sit here and hear, well, this is bullish and this is bearish. Okay, look, you're going to find what makes a good candidate, okay, and what does not make a good candidate throughout the course of this. So I think it's imperative that you guys understand that. Again, a few housekeeping items. Ask questions throughout the course of this, okay? I am reading that in real time over here, so I'll be able to answer your questions. Feel free to chat in whenever you see fit, and if I don't quite answer that right away, I'll get it at the end of the presentation. Let's get into it. This is a little bit about me, okay? Anybody here, seriously, this is, by the way, these are not rhetorical questions. Anybody here brand new and have no real idea what a TheoTrade or a Don Kaufman happens to be? Okay, like speaking of myself and like the third person there. Anybody here brand new? Okay, Y equals yes, N equals no, right? If you're brand new, I'll give you literally the nickel tour, okay? So again, my name is Don Kaufman. If you ever need to get a hold of me after today, okay, we use a common inbox. We use support@theotrade.com. I urge you, email us because we email people back. Average time of an email response right now is in minutes, not even hours, right? If you shoot an email to me, I usually respond. If not that day, I respond like the next morning. But we have support staff. That's what they do. That's how we, keep people in, obviously in the loop. We are traders. And at that, we understand that we have to respond to emails, okay, almost as fast as they come in. So hit me at support@theotrade.com, put Don Kaufman in the subject, goes directly to me. Here's a little bit about my background. So what kind of brings me to TheoTrade and what got me, involved in TheoTrade and, when we launched this company, look, I grew up around traders. I'm not like your average, somebody's like, I was a school teacher and then I was a trader. I was a taxi cab driver and then I was a trader. Me personally, I was a trader and then I was a trader. I grew up around it. I had, family that were market makers in Chicago. I did come from not just a long line of traders. I came from a long line of some of the most, influential market makers ever. My uncle founded a firm called O'Connor and Associates. It's hailed as one of the greatest trading firms. He built from one seat, okay, in the mid 1970s. By the early 80s, he had built that firm to over 500 seats on exchanges worldwide. So I grew up actually watching it. By the time I actually got out of college, which was the late 90s, I had a cousin that worked on the floor. I went and clerked for him. I thought I was just going to do like a little summer job. I went and clerked on the floor at Chicago Board Options Exchange. I never left. I spent about 2 years trading there, and then I was invited. I knew a couple of market makers from the OEX pit, and they invited me to a startup brokerage firm. Now, at 23 years old at the time, it sounded, oh, cool. Startup sounded, kind of cool or so forth. But the advice I got was get off the trading floor from these guys. So I went with them. I was very, very early on with thinkorswim. It's funny because if I mentioned thinkorswim 20 years ago, nobody knew what the hell I was talking about. Okay. And even that was like, 2003. And, again, we built the firm up. In 2007, I was on the executive team when we took thinkorswim public. Obviously, I was involved with TD Ameritrade. TD Ameritrade bought thinkorswim because it's a public company. They bought thinkorswim in 2009. I signed a 5-year lockup clause with TD Ameritrade. And what I did for both thinkorswim and TD Ameritrade, I ran their entire education division, built a lot of the content from it, built a lot of the courses. And the way that we did that, and this is actually probably one of the most important and most insightful stuff, is the way that we actually built education at thinkorswim and the way that we actually built the trading application, okay, is studying you. Okay, you, Stu. No, we actually we studied every trade that ever went through in the thinkorswim platform. Okay, and you realize this platform had more trades, okay, than any other platform. Okay, already by 2005, more trades were pumping through here, especially on the option side of thing, than most platforms combined. It was just incredible, the number of people that actually hopped in the platform. And obviously, there are more option traders today on thinkorswim than all other platforms, literally combined out there. It's pretty amazing in terms of full order flow. So one of the things that we learned over the years, and it's one of the reasons that I say I watched order flow for 15 years, and that's why I'm here. We learned what works and what doesn't for retail traders. Okay, and I say we. Okay, TheoTrade here is I'm not a one-trick pony. We have Jeff Bierman. We have Blake Young. We have Brandon Chapman. The reason I mentioned those names first is that those individuals actually worked in our group at thinkorswim and TD Ameritrade. And when I left, one by one, they kind of came with us here at TheoTrade. So, and we're thrilled again to be out of the brokerage world. It's changed a lot. Brokerage world now is run by attorneys. It's no longer run by traders. So we studied what works and what doesn't, looking through tens of millions of trades, and use big data to do that. Like, I can tell you if you sold a covered call, if you made money, if you sold an iron condor, who made money. And again, what you're going to learn specifically today comes from watching billions and others' mistakes and the knowledge of what works best specifically for retail traders. I still do a lot of TV appearances. In the last 30 minutes ago, I got off. This is TD Ameritrade TV. That's not me today. That's back in 2019. The reason I put up the 2019, that's the last time I was in Chicago. So I still do TD Ameritrade TV on a weekly basis. We've got a great relationship with TD Ameritrade, great relationship with Charles Schwab. Okay, we also have relationships with, of course, many of the other brokerage firms, including, of course, Tasty Trade. Still even work a little bit with E-Trade. This is a CNBC interview. It's the most memorable. It's myself pitted against Kevin O'Leary. Okay, I took him down in that interview. This is also Investors Business Daily. Okay, this is a little bit more recent too. I really appreciated this one because we made the cover of Investors Business Daily. And for those of you that don't know, this is the William O'Neill firm. But of course, this is my favorite quote is, this has actually been the best year I've had since the financial crisis of 2008. So that was in reference. All right, that little quote right there, that's me. And that was actually in reference to having a great year last year. Okay, I'm a big proponent of trading in market chaos and market volatility. And that's what we're in right now. With that, market chaos has arrived. I actually like using the term chaos instead of volatility, because when people think of the word volatility, they want to look at the VIX. You're like, but the VIX is kind of low. The VIX is kind of low right now in comparison to where it's been like the last 3 years. But in the exact same breath, the market's moving. Like, we're rocking right now, and you got to have respect for the movement. So is inflation cooling? Well, according to CPI today, it is. Okay. But if you look at the Fed fund futures for next meeting comes up, July 26th, there's still a 92% chance they're going to raise rates. I just wanted to throw that out there. The Fed pushing rates higher, contracting the balance sheet. Okay. Strong dollar. Even though the dollar's been backing off, it's still incredibly strong. Geopolitical risks continue to proliferate. What do I say about market chaos? I say it's great for Ultima. Game on. Okay. Game on. Just embrace it. That's, the one thing that you got to understand about, markets, they got real. Like, this is real. Two-sided activity. It's not the markets. And I love to use, again, real examples. Like, forget, screenshots and garbage like that. I say markets got real. Look at like the last 5 years. Okay. I mean, up and back down. That, okay, chaos, and right back down, right back up. Like, there's two-sided markets right now. And I say, embrace it. Just embrace the chaos. Stock picking and Reddit boards is just not going to cut it. You want to know one of the craziest things? Okay, and I don't know if you guys watch this stuff, but how many sectors are even up on a year-to-date basis? Have you guys looked at that? Anybody? On a year-to-date basis, how many sectors are even up this year? Okay, you have to recognize the danger inherent in these markets. This is the S&Ps. They're up 17% year-to-date basis. Guys see it? Bear with me for a second, okay? Because NVIDIA is up like 200%. Meta's up like what, 145%. Let's go to the financials. Would you agree that the financials, it's the next biggest sector behind tech? Here's the financials. They're up 0.22% on a year-to-date basis. Just still my heart, at least they're up. Wait, it gets better. Let's go to the energy sector. You guys familiar with energy? So it would go like tech, maybe a little bit of financials, maybe a little energy. ExxonMobil is one of the biggest companies still out there. Oh, look, the energy sector is actually down on a year-to-date basis. Got any other great ideas? Think about that for a second, because the reason I'm bringing that up is to look, proofs in the pudding. Stock picking right now. Look, if you own one of the Magnificent Seven, as they're being called, okay, maybe you're going to be okay. You might not be, though. All right. You're going to need a strategy that embraces the chaos, embraces the volatility, doesn't rely on directional bias. I say Reddit boards are not going to cut it, because you're going to go in there and get what? You're going to get absolutely run over. Okay, you can't rely on directional bias right now, and you got to reduce risk while substantiating monthly returns. One of the most imperative things to understand about today's presentation, okay, is that we're here to generate monthly returns. With that, what's Ultima? Okay. What are Ultima trades? First and foremost, the second time I'll say it, but I mentioned options. So we are going to look at and trade some options. Now, some people are just vehemently like, oh, I'm scared of options. Is anyone here brand new and never traded an option before? Yes would indicate you've never traded an option before. Anybody? Okay, come on, people. Admitting it is the first step. So if you've never traded an option before, you're going to be okay for today's presentation, right? And I know, again, some people are like, I don't know, man, I'm just not comfortable with the idea of options. It's okay. That's okay. All I want to do is run some concepts by you. So we're going to talk about Ultima. Ultima is not ultimate. It's not a take on ultimate. It has nothing to do with ultimate, okay? Ultima is a term, okay, for the volatility of the volatility of the volatility. What it basically is, okay, it's a type of like vol arbitrage. If you've never heard of the term arbitrage, that's okay. Okay, I'm picking up edge in volatility. I'm going to show you expressly what that means. As I started this today, I said, this is about edge, okay? And I'll be very frank in saying, we have been talking about these types of trades in Ultima, okay, for almost a full 3 years now. And people go, well, how come you're not doing a lot of different strategies? Because the bottom line is, okay, why do you change when something works? If you're kind of curious, well, we haven't changed much in the last 3 years, because it works, right? It works. and we have, an arsenal of different strategies we can use. But you go with what's hot. You go with the hot hand and you continue to press until it doesn't work. And right now, I'll be very frank in saying this works better now than it did, okay, when we first started looking at the edge. And it has everything to do with what's called skew. Okay, so when I talk about skew, skew is an actual symbol. If you're not familiar with it, it's SKEW, skew. Yee. Look at skew right now. Right. By the way, this only calculates at the end of the day. So in all fairness, let's change it from a candle over to a line chart. Okay, look where skew is. Sky high, rocketing higher. Right. This is almost one of the highest points of skew that we've seen in 2023. Okay. Skew actually drives, okay, a lot of the option prices considerably higher, right? Considerably higher. Ultima trades are going to be designed to sell that premium. So, and by the way, I'm going to answer those questions here in just a second because I appreciate you guys putting them in. Ultimate trades are designed to sell options premium while reducing risk. We found a very significant edge, and I'm going to show you exactly where that is in the next couple of moments. Okay. From finding that edge, we had to take it a different step because you can't just go out and trade and think that you're going to make money, right? We also had to reduce risk. So you're going to see kind of the full picture today. Learning to sell options. Look, many people have heard through the grapevine that selling options is a great way to make money. People have heard that, right? Anybody? Okay. But this is where you're supposed to jump in. I've heard that. I've heard it. Okay. People hear that all the time. Like, yeah, you know what? I've been buying options, but maybe selling options is the best way to be able to make money. And you'll always see that, like, oh, selling options is the best way to make money. But what happens to people is they experiment with this. They experiment with it and they make money. And they make money and they make money. And then all of a sudden, bam, they're like, oh, it hurts. They lose like 50% of their account. They literally get rocked because they just make money, slam, get hit by a Mack truck. And you're like, what happened? Okay. You're going to know that there's risk involved in doing it. And I stress that. So what we're going to do in today's session is we're going to separate myth from real risk, fact from fiction. Let's cut through all the garbage in this industry. And I hope that you guys appreciate, I'll be very, very candid, not only in explaining this, but in answering your questions, because in the end, right, it's about you and your capacity to make money in this marketplace, okay, while mitigating risk. Now, if you know nothing about options, don't panic, you can do this. Maybe you know nothing about options, it's okay. Newsflash, okay? This is a big one because the question already came in. Selling premium can be done in small accounts under $5,000. In fact, okay, a lot of the rules have changed. So somebody already popped in, they say, I cannot do this in my account. You can, sir, and you will. You can actually do this now in any account with as little as $2,000 in a funded brokerage account. You can sell premium. I want to say this, and I want to make sure that everybody hears me saying this, because people will fight me, 30 minutes from now, people will be fighting me. They're like, I can't do that in my account. Okay. We work with several of the brokerage firms. You can clearly see, obviously, I use a little bit of thinkorswim. Obviously, I use a little bit of TastyTrade. Tasty! Okay. I use a number of different brokerage firms. And the firms that we work with, okay, will allow you to substantiate these trades. And again, we can walk you through that whole process. So for those of you that are brand new to options, okay. All right, by the way, in Canada, no problem. For those of you that are brand new to options, look to grasp big concepts, broad strokes. Those of you that are more experienced, you want to grab the little nuances, what we're going to call criteria. Let's dive into it. Let's get into it. Look, there's a lot of facets of selling premium. When I say facets of selling premium, people call all these different strategies. I like to set the stage the right way from the get-go. And that's this, okay? Bear with me here as I grab this little right on board over here. But look, in this business, you can sell premium. People have heard the term selling premium. Selling premium just basically means what? selling options. There's credit spreads. There's, bull call spreads and bear call spreads and bull put spreads and bear put spreads. There's short call spreads, short put spreads. There's delta neutral trading. There's selling naked. Look, there's a million different terms for it, right? Okay. In the end, there's iron condors, there's mambo combos, there's conversions, there's reversals, there's boxes, there's jelly rolls. Oh my, how many people have heard all this stuff? Huh? Anybody? Anybody ever heard all this, right? You guys have heard these strategies. Maybe I came up with a couple you haven't heard of. Look, in the end, I'm always reminded, in the end, there are calls and there are puts, okay? The last time I looked, what can you do with calls and puts? You can buy them or you can sell them. And that's it. That's it. I don't care. You can call it anything you want to call it, okay? It's a quarter pounder with cheese. It's a double animal protein style, okay? It doesn't matter what you call it. It's a call and it's a put. You can either buy it or sell it. Do not make this business more difficult than it has to be. You're going to trade, you call, you're going to trade a put, and that's it. Calls the right to do what? Buy, puts the right to do what? Sell, okay? And I'm saying this to those of you that are experienced, okay? People think, I'm special. I learned an iron condor. What, you learned to spend more commissions? Is that what you learned? I'm only saying that because I spent 15 years of my life in the brokerage business, okay? And let me tell you, the brokerage business, they do what suits them. There's no fiduciary responsibility. It's a brokerage firm. The only responsibility they have, okay, is to their shareholders. Don't ever forget that. Look, selling premium can be used for both bullish and bearish trades, but generally the stuff is considered market neutral, meaning we're not going to take a lot of directional risk. Look, how our members are doing. Unique, seasoned trading insights and analysis. TheoTrade, a place with a comprehensive set of resources to study and an exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics. I've learned more about the markets and the economy from listening to Don when the Fed spoke, okay, than from my graduate studies. All of the instructors offer unique seasoned trading, okay, and analysis and insights. And the chat with other members is exceptional. Lots of shared wisdom there. You can go as deep as you want or stay as close to the shore and the shallows, your choice. Okay. I just wanted to throw this in here. My review is based on multiple years experience with TheoTrade. One more over here from Orlando. Okay. Long journey with TheoTrade, highly recommend. Been a member of Theo, okay, for about 5 years. Okay. Where I had to unlearn what I'd already learned, okay, from what basically amount to real traders. I have plenty of reasons to recommend them. Theo is a great opportunity, okay, to learn the business of trading. 5-star for customer service, classes, live room coaches, and everything. Okay, for those who criticize the trade recommendations, okay, that are live in the room, what doesn't work for my risk, okay, I pass and concentrate on what suits my risk best. In general, highly recommend, okay, for my part, grateful to Theo. Let's get into it. Let's start to trade, okay? First of all, your trading is based on probability. Everything you do in this business is based on probability. Even if you're buying or selling stocks based on probability, right? You and I, we can create trades all day long with a 90% probability of success, right? One thing I try to implore you to understand. More caffeine, right? Just what I need. High probability of success. Probability alone does not make you profitable. One of the things that I implore you to understand this. Everything that you see on like CNBC and Bloomberg TV, they're about which stocks are going up, which stocks are going down. I think this, I think that, and I think this. You can think anything you want, but I'm telling you right now, you can be right 90% of the time and you can still lose money. You better never forget that. Never, ever forget that, because people all the time, they go on their website and they say, even we do it. We're like, hey, look at that. 112 winners out of, it's like ridiculous numbers. Of course, I'm trading high probability stuff. But the reality is, okay, markets are always a trade-off. They're always a trade-off. Higher probability, higher risk. You could be right 90% of the time, but the way that your brain needs to immediately think, I'm right 90% of the time. No, your brain should, if you want to get into this business, you want to learn this business, don't think about the 90% of the time. I can find you a trade like that, just like that, to find you a 90% probability. You should think, what's going to happen to me the other 10% of the time, right? What you need to do is you need to find edge. What is edge? Edge is a repeatable strategy, something I can do again and again, hundreds, and if not thousands of times, okay? And mathematically say, like, look, if I continue to do this, just this, okay, I can make money. I can have positive expected returns. Do you guys do that? right? And I love, somebody just came in and said, I'm looking for a simple strategy I can use, rinse and repeat. That's what Edge is about. That's when I say it's the law of large occurrences. Like, I just can't stand the stuff where like, I had this one strategy and then I switched to this strategy. Okay. You don't want to be the person that chases shiny objects in this business, right? Look, we're going to find Edge. That's what you're here for. So let's get into it. Let's actually talk a little bit about it. So I always use $100 stock, okay? And I start with the very simplistic example. And I start with this simplistic example because it's, I think, incredibly beneficial, even for those of you that are experienced, to understand conceptually what we're doing, right? So here's a stock, it's trading at $100. Am I going to buy the stock? No, okay? Just say no to stock. What's wrong with buying stock? There's nothing categorically wrong with buying stock, but, okay, and this is a fair question. If you're just trying to make money every month, why do you want to go out and buy stock? Are you crazy? I mean, seriously, like one day you're going to wake up and the stock's not going to be at 100, okay? It's going to be at 90. You're like, oh yes, but it could be at 110. Yeah, but this is your stock. Your stock will end up at 90. You lose $10 per share. Like, you think about the risk, and you're going to wake up in that situation. I just think that the risk is just too great on a share. Like, when it comes down to it, if you want to buy stock, you're an investor. I just can't fathom another reason that you want to buy stock. I'm buying it for the dividends. You're an investor. I'm buying it for appreciation. You're an investor. And there's nothing wrong with being an investor. But today we're trying to generate what? Monthly income. We're not going to buy the stock. We're going to trade options. And in this case, I'm first going to go out and I'm going to buy a call, right? We're going to buy a 120 call. And that 120 call is going to cost exactly a $1 debit. It's going to be good for 3 months. Okay. Now stop right there. Time out for those of you that have never traded an option before. Okay. What's a call do? Call gives you the right to do what? It gives you the right to buy. All right. So if the stock's trading at 100, which it is, here's the stock. Stock is trading at 100. I'm buying a 120 call. What do I need to have happen? If you buy a 120 call, you have the right to buy the stock at 120. If you have the right to buy the stock at 120 and the stock's at 100, you need the stock to go where? Up massively, huge by huge. Look, that stock has to go up 20% just to be able to do what? Get back to where you bought the call. So if you're buying, again, if you're buying a 120 call, you need a wing and a prayer. You're only paying $1 for that, taking a shot in the dark. Like, let's take that shot. If the stock flies, okay, I'm going to make some money. More often than not, though, what's going to happen? You're going to buy a 120 call for $1, okay? And again, buying the 120 call implies that you have the right to buy the stock at 120. If the stock gets above 120, can you buy the stock at 120? Yes. Do you have to buy the stock at 120? No, you have the right to buy the stock at 120. Nobody says you have to buy the stock at 120. But if you have a 120 call and the stock goes to 130, instead of just buying the stock at 120 and selling it at 130, you could just do what? You could just sell the 120 call. Well, we'll get there in a moment. Most of the time, what's going to happen with this 120 call, stock stays flat. If the stock stays flat, you lose your $1. If the stock goes anywhere down, you lose your $1. Even if the stock goes up, you lose your $1. The only way you're going to make money is if the stock goes where? Above 120. In fact, 120 plus the $1 you paid. So the break-even point in here, BEP is break-even point, is $121. But if the stock, let's get crazy, if the stock goes to 130, you're gold, Jerry, you're gold. Why? Because you have the right to buy the stock at 120. Everybody else in the world has to pay what? 130 for it. Let me ask you something. What's a 120 call worth minimum with the stock trading at 130? What's a 120 call? Don't worry about the debit. What's a 120 call worth when the stock's trading at 130? Has to be worth a minimum of what? See if you guys get this. Okay. Some basic stuff here, people. Making sure everybody's on the same page first. Total silence. If you have the right to buy the stock at 120, and the rest of the world has to pay 130 for it, it's got to be worth at least what? It's got to be worth at least $10. Okay, it's got to be worth at least $10. It's so quiet. Everybody's, I'm scared. Not 9. No, 9 is not right. 9 is not right. That's, again, you're thinking about what you're making. Okay, yes, you paid $1 debit, but that's not implied over there. I need to know, look, if the stock's trading at one, you know what? If the stock's trading at 130 and you have a 120 call, you have the right to buy the stock at 120. Everybody else has to pay 130. Okay, you get $10 out of that. Yes, you did pay a debit and then you end up with 9. But that was not the question. Okay, sorry, I'm picking on you over there. All right, onward and upward. We're not going to go out and buy options. We're going to go out and sell them. So in this case, in the first example, I'm going to go out, okay, and I'm going to sell a 120 call. And for that 120 call, now we're going to collect exactly a $1, and this is what we term credit. And again, we're going to make this option good for 3 months. And you go, I don't like it. It's 3 months. I don't want to wait 3 months. You tell me I was going to make money every month. I did, and you will. Just calm down. Just calm down. I know that one's coming. By the way, somebody at this point is also going to come in. I'm just going to jump in ahead of you. Somebody's going to come in. I can't do that trade. I'm not saying you have to do this trade. I can't do that trade. My brokerage firm won't allow. Okay. Yes, they will. Okay. Bad brokerage firm. Bad. You're not even going to have much margin held up in these days anymore. Like things have changed so much, and none of the brokerage firms like even know, like the people that work at brokerage firms, they don't know the rules. I'm just going to tell you, in my last position at TD Ameritrade, I had 768 people, okay, in our organization. That was under my series 24. By the way, I've had every license imaginable inside of my series 24, okay? 768 people, including the margin department. I would say less than 20 people actually knew some of the rules of margining. Okay. By the way, yes, brokerage firms absolutely allow calls naked in IRAs. They changed that rule. They changed that rule during COVID, and nobody even knows about it. So I can even show you my IRA with some naked options in it. Anyway, so I love the questions that are coming in. We have some seasoned individuals in here. Okay, like literally maybe 20 people out of 768 knew that some of the rules, like what they were at that time. And now the rules have actually changed, and they changed during COVID, and there was no cohesion in the firms during COVID. So some of the brokerage firms just said, oh, whatever, I guess we won't change. So I'm going to go out now. I'm going to sell a 120 call. So let's put that down here. We're going to sell a 120 call. And for it, we're going to collect exactly $1 credit. Okay. But this option, the problem with this option, it's 3 months. You're like, oh, really, man? I got to wait 3 months. 3 months to make what? $1? That's ridiculous. I'm not going to do this, blah, blah, blah. Okay. Just calm down. Just calm down, because you're not going to have to wait 3 months, right? Not going to have to wait 3 months. That's what we're going to get into here in just a moment. All I want you to do at this point is understand conceptually. I'm selling a call, and people go, wait a second. How can you sell something? I don't ever remember buying it. We're selling it to open. See, in options, you can be a buyer or you can be a seller right from the get-go, right? If you're a buyer, you have the right to buy the stock at 120. If you're a seller, someone has the right to take stock from you at 120. You go, do I own stock? No. Do you want to own stock? No. This is actually what we do call selling naked. Now, I'm not here to teach you to sell naked. Don't worry about that part yet. I just got to get the concept driven into you before we can move on. So we're going to sell a 120 call. And selling a 120 call, okay, selling a 120 call, you're like, I don't have the margin. Okay, we've already went down that road. Just calm down about the margin. We're going to sell a 120 call. We're going to collect $1. What I want you to think about is the probability in this trade. Think about probability, right? What's the probability? Well, look, the stock, it stays flat. If the stock stays flat, I make $1. If the stock goes down, anywhere down, doesn't matter, I still make $1. If the stock goes up, it gets all the way to 110, I wet myself, but I make $1. Even if the stock gets to 120, I still make $1. When do I start losing money? Above 120. Can I lose money in this trade? Of course you can lose money in the trade. But what I want you to see is that the probability embedded in the trade is incredibly high. This one has upwards of a 90% probability. Okay, it's greater than about a 90% probability of making money between now and 3 months from now. Does that make sense to everybody? Okay, are we okay? Now, see that $1 credit? People immediately associate, I have to wait 3 months to make $1. I'm sorry, I can't wait for that. You're not going to have to wait for it. You're going to learn very quickly what Ultima is. What is Ultima? Okay, Ultima has a tremendous amount to do with what we term, okay, decay rates. Are we okay so far? I'm okay to go. I'm okay to go. Yes. Okay. Because sometimes at this point, the little hamster gets stuck in the wheel. I'm doing this for far too long. Okay. Anyway, if you take a quick glance, in my example, I sold options a few months out in duration. If you look right now, like you look at read any board or anything, people are talking about 0 DTE, which is 0 days to expiration. I'm going to tell you this, okay? As a former broker, as a former market maker, okay, and I ran risk for quite some time. You're insane to do 0 DTE. It's totally chaotic, okay? Everybody that trades 0 days to expiration, if they sell those options, is going to end up in a world of hurt. But it sounds good from a marketing perspective. It's cool. It's like the in crowd. Look, I don't care what the in crowd is. All I care about is producing positive P&L. That's it. I don't really care. Typically, traders are selling short-dated options, but that's actually why people are tuning into this webcast. Criteria is what we do here at TheoTrade. Okay, what is criteria? It's the nuts and bolts. It's the specifics behind the trade. I don't care that I'm selling options. Selling options is a means to say oh, well, you can only buy options or sell options, but okay, it's what options you sell. How far out do you sell them? Why do I sell those options? Okay, because a lot of people are familiar with this. This is what we call a decay graph. And what a decay graph indicates, and if you guys are familiar with this, it's the closer you get to expiration. If you have an option worth $3, the closer you get to expiration, the faster the option drops off. Are we correct with that? Yes, good. That's for nothing because it's wrong. Why is it wrong? Because Ultima changed everything. Okay, yes, options do decay more rapidly the closer you come to expiration. But what if decay wasn't theta? People have no idea what theta is. Theta means time. Okay, what if time wasn't the one that was decaying? What if volatility was? Okay, do you know if volatility is decaying? Because volatility sets theta. Volatility is theta. What if volatility were to decay very rapidly? Are we having fun yet? Okay, because I'm going to blow your mind here in just a second. Now we're going to go to a live trading application. This is thinkorswim. You don't have to use thinkorswim. You could use interactive brokers. You can use TastyTrade. You could use thinkorswim. You can use anything you want. I'm going to jump into a product called the spiders. Okay, why am I in the spiders? Because it's exciting, I tell you. Right, and we're going to open up a couple of different expirations in here, and we're going to get crazy with this. I'm going to open up all the way to the November expiration, 120 days out, 128 days out. Okay, why do I do this? I enjoy torturing you. Okay, I'm going to go out and give you an example. Okay, here's my example. I'm going to sell the 490 calls. Okay, I'm going to sell the 490 calls. So let's actually write that up here for a second. Okay, let's see how this works. So I'm going to come all the way out. Okay, make sure I got it up here. I'm going to come all the way out here, and I'm going to write this down up here so you guys can see it. I'm going to sell, okay, the Nov 17. Okay, that's Nov 17. I'm going to sell the 490 call, and I'm going to collect $1.25 for doing so. Are we okay at that point? Right. And again, I don't like to use slides. I like to come in here. And you know what? Here, people go, you're not going to fill it $1.25. By the way, I know all the everybody's like, you're not going to do this, you're not going to do that, really? Because I'm just going to come in here and whack it at $1.25. Oh, that ends that debate. By the way, yes, they're live trades. See where it says P&L position. So I just sold that at $1.25. Why? Because I was feeling froggy. Okay. I wouldn't do the trade if I didn't want to do the trade. It's only a one lot. Captain, one lot rides again. So now that I sold that for $1.25, I think the question is, why would I sell something that has 128 days? And I know, by the way, where's the margin person coming here? That's going to eat a lot of margin. What if I told you don't have to worry about the margin, that I can actually take care of the margin, that your margin will be nominal? Have I said that like 20 times already? Yes. Why? Because it's true. I'm actually going to curb your margin considerably. So I sold something for $1.25. Okay. Now, what do? Okay. I'm going to wait a few days. I'm going to wait a few days. And what I'm going to do is I'm going to assume, let's fast forward. Let's fast forward exactly like 1 month. So correct me if I'm wrong. If you looked at the 490 calls right now, and then you looked at the 490 calls exactly a month from now, which is 28 days, let's say 28 days, okay, assuming all factors being held equal, what we're looking for in Ultima is about, okay, a decay rate. It's about making money very rapidly in options that are way out of the money. By the way, you realize the market's at 445. So I'm selling a 490 call. We're in the nosebleed seats, people. The market's here. It's like off camera. The market's here, and I'm selling crap way out here. Like the market's going to have to fly. In fact, if you want to look at that on a chart, okay, where's the market have to get to? I can open up every chart imaginable. Market's got to get to almost to like up here, which you would have to get to all-time highs. All-time high, all-time high. By the way, it's $125 credit, yes, for one contract. Okay, it's only $125 credit. I know I'm barely paying for your Starbucks after inflation, but bear with me. Okay. So I got to get to like all-time highs to lose money. I just wanted to show you that neither here nor there. Maybe we could get to all-time highs. But what I want to show you is we're going to look at this 490 right now. Okay. And then we're going to open up the 100-day options. Why? Because if I open up the 100-day options, it's like fast forwarding 28 days. What are the 490 calls worth exactly 28 days from now? Does that make sense? Assuming all factors being held equal, what I'm trying to portray is that the rate of decay of this option is phenomenally quick, and that people are missing, okay, what is a virtual like platter, okay, of trade opportunities. And they just, instead they're like, I'm gonna do what some kid on a Reddit board told me to do. First of all, the kid lives in mom's basement, mom, meatloaf, and has no clue what the hell they're doing. Okay. Look at the 128-day option. Fast forward exactly 28 days. Let's open it up and look at the 490s. Okay. The 490s here are only trading for 58 cents. Friggin' ridiculously good. Okay. Ridiculously good. So exactly 28 days from now, we're going to buy back the Nove 17 490 call. We're going to buy it back. Let's say buy it back right here at 58 cents. I don't care. Buy it back at 58 cents. What are we making? Greater than 50%. In how long? 28 days. You're making more than 50%. 28 days for trading the nosebleed seats. Who cares? You know, that's where, holy crap. Now what do you want to do? Okay, now what do you want to do? As many of those as you possibly can. Like the whole key to this is not just to do one. You're like, oh, great, I'm going to make 50 bucks. Okay, why do you have to make 50 bucks? Why can't you just go out and do this 10, 15, 20 different times? Who cares, right? Trading the nosebleed seats over here. It's to your heart's content. And people are kind of like looking at this like, holy crap, like, how come you didn't find this? How do you even find the decay rate of options way into the future is phenomenally quick, but it's not theta decay. It's actually volatility decay, which is termed Ultima. What Ultima alerts is, okay, I trade, and if you want to follow my trades, it's up to you. It's up to you. We actually trade this and trade it consistently. We have large portfolios, small portfolios. You can't say I can't do this. I only have $2,000 in my account, because you know what? I built a small account. The account that I built is actually a $5,000 account. I built a $5,000 account exclusively for going and executing these trades. Okay. But if you can make greater than 50% at that point, 50% in 28 days or less, okay, are we getting somewhere? Because what I wanted to show you, okay, first and foremost, is where edge lies in today's marketplace. And one of the major edges that is being missed by a lot of traders is Ultima. And you can see there's a lot of contract size out here. And I'll tell you why there's contract size, because it's us, right? We trade, and we trade quite extensively in these markets. We okay? Everybody good? Okay, we're starting to learn something. Do we need to do another quick example in here? Anybody? Okay, quick example. Yes, no, maybe so. All right. I just want to make sure that we're all on the same page before I go on. Again, the most important thing is you guys actually understand this. You're not just limited to something like the spiders. I use the spiders because it's one of the most prolific products out there. I'll go to the QQQ. The Qs of the Nasdaq 100. And I'll do the same thing in the Qs. And I'll go 128 days out. Okay. And I'll jump to a way out of the money option here in the Qs. Right. And look, I like to trade stuff that's right around $1 because it makes the example easier. Right. So here's something again, right around $1. So we're going to look all the way out. These are the NOV. Okay. 17. And we're going to sell this. Okay. We're going to sell the NOV 17 435 calls. And I would collect in this case, let's call it at, well, I can hit the bid here at $1.14. All right. So that's $1.14 credit. Great. All factors being held equal. I know the market could rally. I know it could sell off over there. Okay. But neither here nor there. Let's open up the 100-day expiration. We're just fast forwarding 28 days. What are the 435s trading for? Here you go. About 56 cents. Okay. So I could buy this back. Could buy it. 435 calls. Okay. And I buy it back for basically 56 cents. Ironically, it's the exact same thing. It's about a 50% return, about a 50% return in 28 days. Okay. And again, it's critical. The whole key to this, it's not just like, knowing the expirations. Yes, 128 days works. Okay. It's knowing how to actually put these trades together. And that's exactly what we're going to start explaining. So when you start thinking about why selling options so far out in time, I have a question for you now. Okay. Would you rather be one of these like crazed traders that goes out and sells options with 1 day? If you sell an option with 1 day, what are you going to do? Sell an option for 50 cents. You might make 50 cents, but you can get blown apart. 375, are you kidding me? We're moving $4 today. That's just the Qs. That's a nothing move. We were much higher earlier. We're up like $6 earlier today. This thing could get crazy and get in your face. You're going to risk $6, $7, $8 to make 50 cents. It's insane. It's just sheer insanity at that point. Okay. One of the things you've got to learn in this business is you want to trade. Okay. Not what's the easiest, not with the highest probability. Okay. You want the lowest possible risk. Okay. With the best possible return. Ultima is that right now. Ultima is just that. And we don't go out. Okay. And just sell like naked options and just, oh, I hope, because what's going to happen to you? Okay. What's going to happen to you? Sooner or later, you're going to feel the pain of what we call the 90% probability and the 10% hammer. One of the things that I was alluding to a little bit earlier, let's go back to the spiders for just a second. If you go to the spiders and you go all the way 120 days out, okay, it's going to be easy to pick my position out because, well, it's going to say position right there. Have you seen the probability of this trade? Probability out of the money? Ironically, it's about 91%. 91%. Okay. But what's going to happen to you the other 10% of the time? Okay. I'm going to tell you exactly what happens to most people. Most people learn trades, okay, called like, for instance, an iron condor. Iron condor, it's you sell a call, you sell a put, you buy a call, you buy a put, do a little dance, whatever. Anyway, the iron condor is just selling out of the money options on both sides of the marketplace and just prayer that we stay in the middle. And what people don't realize about selling options is options, and when you sell them and sell them really far out of the money, they inherently have high probabilities. So you can make money, 6, 7, 8 times, okay, which is a credit spread. You can make money 6, 7, 8 times, and all of a sudden, bam, just get hit by a Mack truck. How many people have done this where they make a little money, they make a little money, make a little money, and doing more contract size and more contract size and more contract size, and the market waits for you. It goes, come on. A little bit more, and you learn in the spiders, and then you graduate to the SPX. Oh, and the SPX is the mother of all products. And the moment you're in the SPX, they're like, we got it, and the market just beats the crap out of you, and you're like, oh, you lose like 50% of your account. That's what happens to people. By the way, if you're listening to this right now and you're like, holy crap, man, it's like this guy knows exactly what I've done. I do know what you've done. I spent 15 years on the other side of the screen. What do you think we did at thinkorswim all day? Okay. The guys that actually run thinkorswim, what do you think we did? we sit here on the other side of the screen and watch everybody's trades. I just sit there and watch order flow throughout the course of the day. I did that on some days. Honestly, I did do that on some days. The most insightful days, like back in like 2008, you're like, holy crap. Okay. You see the same stupid things again and again. You're like, lady, don't go in there. There's an axe murderer. Sure enough, she opens up the door, bam, gets hit by that. That's unfortunate. That's how it is watching other people's trades. Okay. You know, I've probably thought of, seen everything that you're ever going to do. The one thing, okay, that you got to understand, like the buck stops here. I know who makes money, who doesn't. Okay. I know what works and what doesn't. I still talk to everybody in the brokerage industry. For those of you that don't know this, thinkorswim was like the darling startup. Okay. We eventually, you know, went public for, it's about 600 million. 600 million sounds nominal now, but it's about 600 million. Then the firm sold again to TD Ameritrade less than 18 months later, okay, for over 700 million. Anyway, it was like the darling startup. And everybody from the original executive team broke apart, okay? And one of my buddies runs Robinhood. That's right, Steve Quirk runs Robinhood. Another one of my friends, Mary Ryan, actually runs part of E-Trade. Okay, so we got the bases covered there. The other ones went on to start up called Tasty Trade. Oh yeah, they just sold that for $1 billion. Oh, yet another one actually runs, okay, another firm, and it just goes on and on and on and on. It's almost like the PayPal mafia just spread everywhere. We've seen everything. We still all talk, okay? And nothing has actually changed out there except this. You can do this in any account size now. And it's one of the reasons that we talk extensively about it, okay? So one of the things that I want to bring up before I go on, see right here, okay? These are micros. So I want to bring up what the micros are. Bear with me here for just a second. I want to bring up micros going into a standard margin account. What a micro is, it's an option on a futures contract. Why would you want to trade this? And a lot of people immediately see this. They're like, I don't even know what it is. Okay, look, is there a 128-day option on this? Yes. Is this basically the same thing as the spiders? Yes. Then why does it look different? I don't know. No, because it's an option on a futures contract. It's basically the same thing. Same thing. Okay. You can go out and you can sell options out here. Right. And when I say you can sell options out here, look, okay, if I sold this little option here, let me clear all the trades out. If I sold here, this is an option. If I sold this little option right here, okay, for instance, we'll make it $11. The margin that's going to be held up, the most important thing over here is margin. The margin that's going to be held up, that's the buying power effect, is right there. It's $611, okay, of buying power. That's if you sold it naked. You go, what? Yeah, well, so it holds up $600. You go, that's ridiculous. Yeah, because this actually uses a new margin system. Well, it's new to retail clients called span margin. It's like risk-based margin. It's spectacular. Okay. How come you're not trading these products? Oh, I have another one. Did you know, okay, did you know that this has no day trading margin rule? You can day trade it all you want. You can have $2,000 in your account. You can day trade this product. There's no date. Like I see people all the time, like in Reddit boards, are like, the day trading margin rules set me back. Okay. What are you, new? There's no day trading margin rule in options and futures. So don't trade spiders, trade options and futures. It's the same thing. Okay. They're the same exact thing. So never, ever complain about margin, because I'm going to tell you right now, this is a $5,000 account, but you could even do this with a $2,000 account. Who cares? Be Captain One Lot. Captain One Lot rides again. Right? Look, what you have to worry about though, what are you going to do when you're wrong? Anybody? Okay. What are you going to do when you're wrong? Because what people don't get in this business is, look, eventually you're going to get killed. You're going to get killed. And the whole key to the business, it's not about just doing 90% trades. Okay? It's not. And that's the whole thing. You know, once it goes against you, you're going to get absolutely hammered. And the market is evil enough to allow it to work. It works. And you're like, I'm a believer. And the market just comes after you. And it's like this beast gets unleashed upon you and starts ripping apart. Okay. What you need to understand about this business is it's much more about inventory management. You know what a lot of people think? Okay. A lot of people think they can fix stuff. I can fix it. I know I can fix it. And when the market starts to rally, you're like, I'm going to look for a fix. I'm going to do this. I'm going to do this. Okay. I'm going to morph the trade. That's what we call an amalgamation of crap. Doesn't work. Fixes ain't going to work. Okay. I'm such a cynic about fixing because that's just getting out a shovel and just digging yourself in deeper. Right. And by the way, the idea of fixing a trade adds risk to an already losing trade. It just racks up transaction costs. Some fixes may work, but the very notion of fixing throws good capital after bad. You have to understand when trades go against you, it's like this. Take a car, drive it off a cliff, and bring it to a body shop. What are they going to tell you? They're going to go, that's a nice piece of crap. Okay. I'm going to say the same thing about your trades. The point being, okay, if you want to do this, there's a couple things you're going to learn. First of all, okay, we're going to now show you like the full picture. The full picture, how do I do this, okay, effectively? How you do this effectively? We are not, okay, where are the spiders trading at? SPY, oops, let's tighten that up a little bit. I think the SPY was trading at, what was that, 445? Okay, SPY's at 445, and we were selling, what was that, a 490 call, and we were collecting a buck on it. Timeout. That's not the trade. Okay. That's not what is going to make you money in this business. You're not going to sell one call. Okay. And go, yay. How do proprietary trading firms make money? How do market makers make money? Okay. How do real traders make money? I want you to seriously consider that for 1 second. How do market makers make money? Okay. How do proprietary, when I say proprietary trading firms, you have no idea what that is. Okay. They're not market makers. They're just traders that have pooled capital together. Big trading firms, hedge funds, so forth. You know what they make money through? Inventory management. This is an inventory management business. If you know, okay, that you can go out and you can make 50% on an item in 28 days, at that point, okay, you say to yourself, wait a second, I can make 50% on an item in like a very short amount of time out. How many times can I do that? Does that make sense? Like, I should say, does that make sense to you? Because it's one of the important things that I just want to stress right now is there's an inventory management. Look, okay, this is a pen. Can you see it? Ironically, it's an E-Trade pen. It's all I had sitting over here, okay? It's my E-Trade pen, and it's broken. Here's a pen. I can get online, okay, and I can sell this pen, for instance, for $1, okay? Then I can turn around though and I can buy these pens somewhere else for 50 cents. What's my return? 50%. Now I got to mail the pen out. It cost me a couple cents in there. So there's some transactions, a little bit of slippage, but I can do, one contract of pens, which is equivalent to 100 pens at a time. So every time I actually do this, I can go out there and sell, 100 pens, turn around and buy those pens, $50, done, making 50%. Now what's the key? If I know that I can make, and forget about how much money it is, if I know I can make 50% on this pen in 30 days, okay, what's the key? You guys tell me. If I know I can make 50% on that pen inside of a month, what's the key? Okay, drive inventory as hard as I freaking can. That's it. Okay, inventory, inventory, inventory. What do you think Amazon does? Inventory management business. Okay. In the inventory management business, there's always going to be a cost of doing business. Like if you actually wanted to be in the pen business, and you're selling pens, okay, sooner or later, you got to bring in some employees, you got to buy them insurance, there's health insurance, there's special insurance on the health insurance, okay, before you know it, okay, your edge is gone. It's ridiculous right now, the price of doing business. In this business, okay, your margins are nominal, meaning that like, what do you have? You have transaction costs. Transaction costs are negligible. Agree? Okay. There's one thing you have to have though. You can't survive this business without a hedge. You have to hedge because you're not just going to go out and sell that call. You're also going to sell, for instance, a put. And I might sell like, I don't know, let's sell the 370 puts, and those 370 puts might be trading for as much as $2. We'll look in a second. Why would I sell a call and a put? Because it doesn't tie up more margin. It ties up margin. So the cost of doing business, it ties up what? $600 to sell the 490s. It will not tie up an additional $600 to also sell the put, because the market can only go higher or it can go lower. It can't go both ways at the same time. Somebody always says, what if the stock splits? I'm like, oh boy. If it splits, it does not mean the stock goes up and down at the exact same time. Okay, I know. Anyway, the point of this is, okay, you can't just go out there and sell naked, because if you do, and like somebody came into the chat and actually it was Wayne, he's like, what are you going to do if this thing goes against you? I'm going to tell you, if you don't know what the hell you're doing, you're going to get killed, sir. And it's going to be a bloody, bloody mess. The whole key to this is inventory management, and you have to hedge. What's hedging? Well, let me just show you what's going to happen. One day the market is at 445. Okay. The next day you wake up and boom, the market's trading at 400, and you go, because you know what a 370 put is going to do? A 370 put is going to go from $2 and then it's going to be worth $10. And what are you going to do? You go, mommy. It's going to be brutal, right? This is what happens, okay, to traders that don't hedge. What is a hedge? It's like an insurance policy. It's a cost of doing business. Cost of doing business, okay? And you know what? Like sooner or later, I always get one person like, I don't like the idea of hedging, because every hedge is a sacrificial lamb. Look, I live on an island. My island does not have a volcano. There is the one about 300 nautical miles away from me, okay? I'm in the Caribbean, and we're on a 28-mile island, okay? But if that volcano goes off, we're all in trouble. I always think to myself, for some reason, of like taking a lamb and throwing into the volcano every single month. Just throw a lamb into the volcano, and it'll all be okay, because I don't want to anger the beast. It's not dissimilar inside of here. We're going to use a hedge, and the hedge is going to have a finite expense associated with it. But that's your only expense of doing this. And in an inventory management business where, like, if you were selling pens, you'd have to have like health insurance and this insurance. And, you know, then there's this guy named FICA that's coming after you. It just goes on and on and on and on, all the different expenses involved. Okay. In this business, okay, look, I'm going to teach you how to hedge. Let's get to it, right? Enter the hedges. Actually, before I do that, I do want to look the spiders. Go out 120 days. Okay, go look at some of the puts. If you thought the calls were trading at juicy, look at the puts. As I said, 370 put should be about $2. It's like I've done this before. Okay, look at that. That's some juicy. The puts are trading for double what the calls are trading for, and they don't tie up any more margin. In fact, I'll show you here on Tasty. Tasty! Look, the buying power effect here is $611. But if I go and I load up a put at the same time, okay, the buying power effect actually goes down from $611 to $594. Why? Because it's risk-based margin. It knows the market can't go up and down at the same time, okay? The hedge is a very, very nominal fee, very nominal fee, okay? Somebody already asked, like, how many wins do you have to have? You don't necessarily have to have wins. I'm going to tell you right now, you can't operate without a hedge. Doesn't matter. Okay, you can't operate without a hedge, because if you operate without a hedge, you're the duck. Okay, no one wants to be the sitting duck, because the duck eventually, okay, ends up as Peking duck. Not good. So we're going to go out there and we're actually going to talk about this in light of everything we've discussed. We're going to talk about the SPY trading at 445. Okay. And we're going to go all the way out here and we were going to sell. What was that? A 490 call, collect $1. We were simultaneously going to sell, okay, a, what is it, 370 put, collect $2. Okay. Before we know it, the market moves a little bit, and we're probably going to turn around and sell, I don't know, might be selling like a 360 put, collect another $2. And inherently I'll be selling, okay, let's make this a 500 call, collect $1. Eventually we'll be selling a 480 call, collect $1. Okay, maybe I sell 375 put, collect $2. All I'm saying is, as the market's going up and going down, as the market rallies, I sell a couple calls, the market goes down, I'll sell a couple puts, okay? And then enter the hedges. Okay. Why do I need hedges? To survive. You can't be in the business without it. Because sooner or later, if you did this, the market's going to shift big one way or shift big the other way. There are predominantly three hedges I use. There's one, there's two, there's three. The first hedge is known as an RTS. It stands for risk twist. Okay. The second hedge in here is a VIX vol spread, known as a VVS. It's VIX volatility spread. The third one, okay, we call it a gamma iron. Look, I'm going to explain this in terms of VIX. Right in this little equation here, we're going to put a trade right there. You know what the trade is right there? Okay. That's going to be our hedge. And that hedge, I'm going to make this as easy as possible, is going to be a VIX vol spread. Okay. For those of you that understand VIX, what is VIX? VIX is the S&P 500 volatility index. Okay. If you're not familiar with VIX, well, I think you're familiar with the concept. If the market goes down, and I'm not just talking like down a little bit. If the market goes down to where you would be threatened on a 375 put or a 370 put, if the market goes down big, VIX goes what? Kaboom. It'll explode in value. Right now you have a VIX, what? 13, 14, 15 handle. Can you imagine if the market went from 445 and shot all the way down to like 375? The VIX would explode. Okay. And you know what? It's exactly what we're banking on. VIX volatility spread. Often these trades cost us next to nothing. This is one of the cheapest hedges. And the VIX vol spread, it will explode in value. And what it does is it provides an umbrella for the trades that you've already sold. Is it going to offset 100% of the risk? Absolutely not. But you can't function without it, because you know it's literally like jumping out of an aircraft. You have no parachute. The VIX vol spread is your parachute. Just actually explodes in value, gives you more than enough time to make decisions. You don't have to panic. You know you have a VIX vol spread on. I'll give you an example. Right now, the VIX might be trading at 14 or 15, right? Okay, this morning it's crushed down a little bit. All of a sudden, if big news came out overnight, like tomorrow is PPI, okay, or today was CPI, okay, if CPI came in hot today, that VIX could have gone to 20, 25, the market could have tanked. Could have, okay? I don't know when that day is going to be. You don't know when the day is going to be either. You can't function without some type of a hedge. And again, the hedge is going to be this nominal cost. So when the market goes down, the VIX goes poof, okay? And it covers a tremendous amount of your risk. To the upside, there's upside risk as well. To the upside, okay? The upside risk is fairly easy to manage, but we use what's termed a gamma iron. If the market rallies huge, it actually has to pass through the hedge before it can hit your inventory, okay? Again, it's the cost of doing business. Hedges are essential. And people think that the hedges can be expensive. They're actually very nominal costs, okay? But overall, when I talk about nominal costs, you know, you can't go out there and buy a house with a mortgage without having insurance. You can't drive a vehicle without having insurance. Why do you think you can sell options naked without having some backup plan? You have to have some cost of doing business. That's it. That's all you basically have to learn. You have to learn how to put this together. Now, I know the first time I actually show this, you're like, oh, he's selling 3 here and he's selling 3 here, and then he's got this here and he's, oh. Okay, it looks like a lot. What if this took, okay, a couple of weeks to get all this inventory on? You don't have to put this on tomorrow, okay? This stuff takes a little bit of time. It's easy, it's straightforward, okay? And it produces decent returns in very short periods of time. And when you take something off, what do you then do? Put something else on. And when you take something off, what else do? You put another one back on. Why? Because it's an inventory management business. All you're trying to do is play hot potato as many times as you possibly can. Why? Okay? Because those potatoes are worth 50% in 28 days, onward and upward. Look, this is why you want to sell premium. You can now do this in small accounts. As I showed you, this is an account that has a couple of grand in it, right? I cleared the trade out. Anyway, this is an account with a couple of grand in it. The buying power effect was $600. It was less than $600 to be able to do that, okay, inside of an extraordinarily small account. You can also do it in an IRA. Produces positive decay, okay? You can enhance existing positions with this. It doesn't have to be done solo. Like when I say enhance existing positions, We actually can teach you to do this against existing positions, provides an incredibly high probability of success. Most of the time, you don't use those hedges. You go, then why do you use the hedges? Because you have to use the hedges. It's a cost doing business, right? You never need to buy or sell the stock, okay? And you could be wrong on market direction and still produce profitable trades. You know, people spend all this time in the charts and the MACDs and the Fibonacci's and the Bollinger Bands, and they learn all this stuff, okay? We just learn inventory management because that's what trading firms are doing. They're just managing inventory. And I'm telling you, in this marketplace, in a rising interest rate environment, you need this in your life. You have an inflationary environment. You still have an inflationary environment, even though it's come down, okay? You have a rising interest rate environment. You have an extremely hostile condition out there in terms of geopolitical risks. You need this in your life because the truth be told, I don't know what tomorrow brings, neither do you, okay? AI, yeah, it might be lovely, or it could be a complete bust. We'll see. Look, selling premium could potentially bring in consistent returns while minimizing your risk, okay? You want to learn to build like premium, minimize your risk the right way, we're going to discuss criteria. Criteria are the nuts and bolts behind this. It's which options to trade. Before I get to any of that though, okay, here's a few live trading examples, okay? These are trades that have been placed. These are trades that are alerts. As I kicked off this presentation, what's the name of the presentation? Well, the name of this presentation is right here. It's Ultima Alert, okay? What does that mean? I want to show you some of the track record of the alerts that we have done. Alerts being not just ideas, okay? These are trades that we have alerted people. Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of a retirement account, okay? Look, what I'm going to show you here, and I'm just going to start with Tesla, just because it's a marquee stock, but I'm going to start with Tesla. And what I'm going to show you here is a track record, okay? I'm going to start all the way back in Jan of 2021. I'm going to show you about 18 months of results, and then I'm just going to show you the live results right now. I'm going to take you up to present day. So this is kind of trade by trade. This is Tesla short call. And the reason I'm showing you this, I want to show you exactly what I'm doing here. This is open date. This is close date. That's the return. The exact strike, the expiration, okay, to open to close, the price I opened the position for, the price I closed the position for. And if you look at this, you're like, where did that screenshot come from? I'll tell you exactly where it came from, right? These are trades that were done specific to thinkorswim, right? And I'll come in here and type in, for instance, ES. I trade a lot of ES. So if I brought up the last 360 days, bring up 360 days, I've done 102 fills in 360 days, okay? So when I say that everything we do here at TheoTrade, it's completely no holds barred. You get to see every transaction. You get to see every hedge. Somebody earlier was talking about the hedges, okay? Well, I can see the hedges in here. That's a hedge right there. It's a vertical spread, different than the VIX spread, okay? I can see every hedge. I'm showing you every single position that I have done, okay, for basically the last year. And you can see this is back to 2022. It's a little confusing though to look at this because it's like to open, to open, to open, to close, to close, to close, to open, to open, to close, to close. So what I did is I copied these and I pasted them in this format. We okay? Right? All right. So with that, bond short put. Okay. You're like, I don't trade bonds. Well, maybe you could. These are trades, again, that are alerts. When I say it's an alert, you know what an alert does? It goes out to your cell phone, right? In fact, an alert can be a text message. I'm just pulling up our app. Alerts are text messages, but they're also on a TheoTrade, okay, on a TheoTrade app. We have our own application. And the reason that we have our own application is that we actually can send you out alerts, okay? And those alerts are done through push notification. So even if you miss something, you can look at our application and go, oh, they did that trade today. You get full access to that, okay? So it's the opening transaction, 57% return, right? Opening and closing transaction. Opening and closing transaction, okay? 53% return. Opening and closing transaction, 62%, 53%, 76%, 60%, 50%, 51%, 57%, 49%, 50%, okay, 62%, 53%, 50%. Again, we're all the way back in 2021, 50%, 64%, 53%, QQQ, 57%, 56%. I like IWM, I like QQQ, I like spiders, I like some of the bonds, 54%, 19% loss. What, you didn't think we're gonna have any losers? Okay, 54%, 52%, 49%, 47%. And I'll just start scrolling through here. Now, as you get a little bit more comfortable with the trades, okay, and by the way, if you're watching this right now, you're probably thinking, you're like, well, he just does the exact same thing. No kidding. Okay. Like, look, these are the 150s. There's bonds 147s. Okay. Bonds 153s, bonds 154s, bonds 148s, IWM 260, IWM 250, IWM 255s. Like, how many times do I have to tell you? It's the same damn thing again and again and again. Why? Because it gets results. 50, here's 50%, 53%, 54%, 63%, 50%, 53%. As you start to get a little bit more experienced, okay, we jump from spiders and we use the ES. The ES is exactly 5 times the size of the spiders. So like a 1 lot in spiders is the same thing as a 5 lot in the ES, okay? We trade ES. In fact, I did a trade in ES today. You wanna see? Okay, look, let's go into the S&P options and futures. We're going to go 111 days out. Just look. Okay. There's my trade today. And I'm going to tell you right now, I know I sold that for $12.25 today. Okay. I sold it for $12.25. You're like, oh, it's up $62. Who cares? That's not why I'm showing you. Okay. What I want to show you, look at the volume here, 389 contracts. Now, time out. You think 389 contracts, well, it's not that big. That's equivalent to times 5. It's trading. Okay, almost the equivalency of 4,000 contracts. Sorry, apologize. So it's 4 times 5. It's 2,000 contracts in equivalency of spiders. And that's us, because the open interest, which is only calculated at the end of the day, was 63. We did 389 contracts in there today, right? And again, if you look at some of the other stuff we've done, let me actually pop to one of the other accounts. Okay, I want to show you when we do an alert, when we send out a trade, okay, you can see open interest in here is 691. Okay, open up the 64-day trade. Look where I have positions. Wherever I have positions, there's thousands of contracts trading. Why? Okay, because we have about right now 6,000 people that are trading. Now, I'm not going to sugarcoat this. We trade the ES. There's size in the ES. Big trade. Okay, you trade the ES, you need to have $50,000 account. Okay, a lot of our clientele follow some of the smaller products. You get to decide that. You can actually follow the big trades, which is ES, or you can follow the small trades, which is the MES, which is exactly 1/10 the size. Okay, anybody? I mean, think about that for a second. If you have 50 grand or more, you follow the big boy. If you have less than 50 grand, anything less than 50 grand, you follow the smaller portfolio. So we actually are very decisive when we split the trades up, okay, into there. So here's another 50%, 50%, 51%, 51%. Okay, as I scroll through here. And again, as you start to get up there in the learning curve, okay, we actually will show you trades like Christmas trees. Christmas trees, okay, this has got a hedge built in. $21 credit closed for a $3 debit. Huge, 85% return. Okay, as I scroll through here, sometimes returned, okay, got cut short. Like this trade was on for way too long. I just cut it short. All right. And as I kind of scroll through here, again, you can see everything we've done. Christmas tree, 92% return. ES, 52%, 53%. Okay, you want to talk about consistency? This is what trade is. This is a Christmas tree. 1 unit made $3,953 of profit. It literally in 1 unit of this trade. Okay. And as we start to turn the corner here, this is 2022. You're going to look at this. All right. There we go. Another Christmas tree trade. Okay. And coming into May of 2022, this is the last. I stopped cutting and pasting right here because I cut and pasted literally 18 months of trade into here. And you go, well, what happens after that? What happens after that? Okay, is you got to look actually at the at our portfolio. you gotta actually look at the live portfolio. See if I can actually bring it up over here. So I say look at the live portfolio. Well, I'm going to go ahead and bring up, okay, the TheoTheo live portfolio. Here we go, right? So this is the TheoTheta live portfolio. Let me just show you. These are all the opening trades, okay? Everything we've opened to open to open to open and everything that's been closed, right? And you can match them all up. I was just copying and pasting from my live trading account. You can opt in to the big portfolio or opt into the small portfolio, and that's completely up to you, you know, okay? And everything you get to see, to open to close, to open to close. You can see there's a couple of closed positions a little bit more recently, to open to open to open, right? So it's critical, though, that you understand all of this is texted out to you. All of it's done through push notification, okay? And all of it is on our site. It's also on our mobile application, so you can follow every little nuance. You don't have a lot of time. It's not going to be a huge issue. Everything we showed today, everything we show, by the way, every one of you can do it. So a lot of people say, well, my brokerage firm doesn't let me do that. And we covered that a little bit earlier, but we will get you approved. We'll get you approved to do whatever you want inside of your account. The trade results that we're showing are not sitting in front of your computer screen all day long, okay? We execute trades. Like this morning, we executed a trade. Quite frankly, we hadn't done a trade, okay, for about 10 days prior to that. There's times where there'll be literally 10 days between trades. We try to average more trades than that, but what typically happens is, okay, markets do nothing and stagnate. We make a couple of bucks, close a trade, right? And that could take 10, 15 days. And all of a sudden, a flurry of activity where boom, 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 because the market's making a big move. Like this morning, we made a big move to the upside, jumped all over it, okay? Look, even a fraction of your time is enough to see good results. And now we provide real-time trading alerts. So one of the biggest differentials, right, is real-time trading alerts. And I don't want you to think, again, that you have to sit in front of your computer all day long. You can even use GTC, which is good till canceled orders, to close these positions, okay? Right now, we realize that the markets are in the midst of little fits of volatility. Maybe you don't have enough time to ramp up into a new skill set. It's fine. Follow the trade alerts. Selling premium is a wonderful hedge for recessionary times, okay? And yeah, I do consider this recessionary times. Why? Look, I listen to the Fed. And what's the Fed saying? They're raising rates to push you into a recession. So fine, okay? Markets could be in a bout of volatility for years. And I'm going to be very frank in saying, I'm not telling you that markets are going to be in volatility for years, okay? I'm telling you that is what the Fed implies right now. I'm not saying that to scare anybody, okay? That's what they're implying right now is higher interest rates for years, which stagnates growth, which is perfect for selling premium. What our members are saying, if you're serious about trading, okay, TheoTrade is by far the best resource out there. If you cannot make dollars, you're not paying attention, they even have hands-off approach in trading, as really don't want to learn, trade on your own. Their instructor's the best in the business. Okay, it comes from Mike. Characteristics of Ultima Premium, right? You never have to buy or sell the stock. Risk can be tailored to precisely your comfort level. We don't ever use stop orders. Very time frames minimize risk. Probability of profitability is high. Most of the times, these trades go off without a hitch. You still need to hedge, right? It's the perfect strategy to enhance a stock portfolio. It's an excellent tool to try to build returns. It's about monthly returns. And new products allow for the sale of options in any account size, right? Look, building a portfolio of options. The one thing that I implore you to understand, do not let the options side of this intimidate you, okay? Let the alerts do work for you. One of the things I always say about options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market, right? But, okay, you have to learn a little bit. We're cutting that learning curve. Let the alerts do the work for you. Selling premium can be done for very, very minimal credits. You could have $2,000 in the account. You go, I'm making a couple of bucks in here. Yeah, but you're still making money and learning this business. Look, you can sell Ultima Premium and minimize risk. Again, don't let the options portion of it intimidate you. You're going to need these strategies for the foreseeable market future. There's not much I can tell you other than it looks weird that the Fed's raising rates and markets are nearing all-time highs. Okay, look, we can show you how and when to sell option premium in a matter of hours. But more importantly, the biggest single change that we've made at TheoTrade since we launched TheoTrade in 2016 is we're now producing real-time trade alerts, meaning we're not just here to educate you, okay? This is what we do. We trade, you trade, right? This is what you need to successfully know to sell Ultima Premium for a living, meaning like this is the criteria, right? This is what you're going to need, the nuts and the bolts behind this. What underlying stock indices make the best Ultima Premium selling candidates? What volatility should I seek out? Like, think about this for a second. When I talk about candidates, like, look, what have I been trading? What I've been trading today? MES, spiders, ES, okay? I mean, those products are absolutely fine, but you have to know what volatility should I seek out? What options expiration do I select? Have you guys looked at an option chain lately? Look at these ESs. Look at these ESs. Look how many different option expirations there are. I'm still scrolling, okay? 1, 2, 3, 5, 6, 7, 8, 9 days, 12 days, 13 days, 14 days. There's an expiration for every day of the week now, literally, right? You got to actually hone in. You can see where my positions are. You got to hone in on exactly the right expiration. You got to hone in on exactly what option to sell. What expiration do I buy? That basically means the hedge. How do I build the position? There's one question, okay, that nobody actually, asked, and that is, how many of those VIX spreads do I need for how many options do I sell? We take you into all of that, okay? Do we need a large amount of capital in my account to do this? Absolutely not. And what's the right amount of risk for me? We can dial that down. What are the percentage returns supposed to be? About 50%. How do I protect myself from crashes? You hedge with trades like VIX volatility spreads. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. And now, real-time trade alerts when any of these opportunities arise. Look, trading is about answering the what ifs. What might be a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do I commit? What options do I sell? What options do I buy? How can I limit my risk? TheoTrade has your answers, and we have trade alerts. So we build these recipes with definitive criteria. They're actually checklists for each strategy and each unique variable. We have full-blown classes on how to do this. But more importantly, when I say we have a checklist, we've actually built, okay, very concise checklists for getting into the trade and getting out of the trade, okay? The checklist would look something like what a pilot would look at before taking off. And you hop into a 737, nobody actually goes throttle up and let's go, people, get back, okay? Sit back there. It's not like kids in the car, seatbelts on, go. They actually go through a very definitive checklist, do the exact same thing. Step 1, what products do I trade? Step 2, okay, what's the open interest, the bid offer spreads look like? Step 3, what's the volatility should I seek out? Step 4, we actually go through this very methodical checklist. That just gets you into the trade. Getting into these trades is easy. It's what you do in managing the trades, okay? Every variable is covered. And we're now taking TheoTrade a step beyond criteria. If criteria isn't enough, if the class isn't enough, we also, okay, will give you alerts. When we find criteria that fits, we execute trades. We trade, okay? And you get to see the alert. TheoTrade is the answer to your questions. We'll give you the right probability for the trade. We'll give you how many option contracts for the account size. When do you close the premium sell? What if we sell off big? What if we rally massively? Okay. How do I fix a losing position? It's the how, it's the when, it's the why, it's at what price. And I'm telling you right now, people, this is just the beginning of the variables that you're going to face when selling Ultima options for a living. Look, you can read about what selling options is. In fact, if you Googled right now, if you Googled selling options premium, 10,000 pages are going to come up, okay? What they don't have is the criteria. If you went over to Chat GPT, which I know some people are doing right now, tell me about selling Ultima options. It'll tell you on Chat GPT that Ultima is a form of volatility arbitrage. Chat GPT is right, but it doesn't have the criteria, okay? And again, some of you even know how to build a couple of trades, right? What you need is TheoTrade's alerts. 20 plus years of trading experience, frankly, as of basically 2 weeks ago, I'm now officially a 25-year veteran of this business. Started trading in the late 90s. I had access to client order flow for 15 of those years. I have viewed and studied millions of trading accounts, and I ran education at both thinkorswim and TD Ameritrade while we had the largest option order flow in the entire industry for those 15 years. Look, Ultima Trade Alerts is your recipe for success. The following strategy and corresponding criteria requires the utmost attention to detail. We spent literally years fine-tuning the trade, the criteria, and now real-time alerts on the convenience of any mobile device. The Ultima Income Generator alerts. We have two different portfolios that you can follow. $5,000 portfolio and a $50,000 portfolio. If somebody immediately says, I have 15,000, what do I do? We're going to get there. Look, 3 months of alerts, it's $297. Okay. And there's a full money back guarantee on it. Like, there's no if, and, or but about it. We presently have 6,000 clientele here at TheoTrade. Okay. Why? Because it's $297 for 3 months, and we give you everything that you're going to need in this business. We will give you alerts. We will give you education. We will give you all the support that you could ever use. That includes text and push notification. We have a live trading room. Okay, you get access to that. There's no additional fees. And the other question that everybody has, and I want to be very clear about this because I don't mind saying, look, what we do is $297. What happens after 3 months? It's $297. We are not doing a membership. This does not auto renew. Okay, that's no renewal. That's no. Why is it a no? You have to say, I want to do it again. Why? It's just the way it is. Like, look, people don't like gym memberships that you can never get out of. You have to like show up and do a dance in front of them to get out of the gym membership. We don't do that. Look, it's $297 for 3 months. And after the 3 months, if you want to do it again, it's $297. And I'll tell you, sometimes life gets in the way. We get it. It's summer and I had to go on a vacation. Don't worry about it. Okay. It's a full money back guarantee. In the first 90 days, if you don't like anything, you don't have to send us a phone call, nothing, just email us. Just email us and say, I want my money back. There's one thing that I implore you also to understand about TheoTrade. Okay, we're no holds barred. Okay, there's no, look, you get to see everything that we do here. But the one thing that I always say to people, we want people that want to be here. Like, if you don't want to be here, it's fine. It's only $297. Okay, I'll still love you tomorrow, even if you get your $270 back or $297 back, whatever it is. It's a nominal thing, but obviously we have to charge something. We also have 7 other full-time instructors here that are completely different styles of trading than myself. Like, I went out of my way to find people, okay, in our group here at TheoTrade. We have intraday traders and trend traders and futures traders. Okay, we give it to you all. You go to theotrade.com/SKU to enroll for it. Now, I do want to show you something because we have changed something. Look, if you think you've seen this before, you haven't, because we added something. Okay, look, the Ultima Income Generator Alert Service. This includes everything at TheoTrade, and it includes alerts now. It's $297. And I'm just going to throw the web address up here. It's theotrade.com/SKU. S is in Sam, K is in Kick, E is in Echo, W. theotrade.com/SKU. Okay. When I say there's 30 riskless spots, I will show you the money back guarantee. All you have to do is click add to cart. Okay. When you click add to cart, okay, and I'm not done yet because we're actually going to add something to this that's going to be spectacular. When you click add to cart, fill out the billing information, put your phone number in, because your phone number automatically enrolls you for alerts. Okay. By the way, alerts now are officially coming from a 602 area code, I believe. We just changed that, which I'll make sure that that's changed in the slides over here as well. You can do a payment, $297, 2 payments of $249, 3 payments of $100. The reason I just show you this is, look, all of these still have the money back guarantee. Okay. So it's theotrade.com/SKU. Okay. Those of you enroll for it now. there are 30 riskless spots left. I'll talk about the money back guarantee here in just a second. Now, before I go any further, okay, we do two different portfolios, a TheoTheo small. Okay, you can do it with 2,000, but you should have 5 grand. Okay, you can do this in an IRA. So I want to make sure that we're distinct here. You can do this with an IRA. This, well, some people are going to say, well, I have 15,000 bucks. What do I do? Okay, you just basically do this times 3. If you have $50,000 or more, you follow the bigger the portfolio, which uses the ES. We make this very clear, okay, upon you enrolling for this, right? So it's 3 months. And again, after 3 months, if you want to do it again, this is not like, I just don't want people to think it's like an introductory rate, because it's not an introductory rate. You know, inflation doesn't affect us here, right? So what do? As we've grown TheoTrade to 6,000 clientele, we just added more instructors and so forth, okay? Look, and people always ask me, how come you're still doing this if you're making money trading? Because I'll sit here and still talk to my damn computer screen, whether you're here listening to me or not, right? I mean, my wife went nuts. I exited TD Ameritrade in 2015. And for a period of multiple months, just sat up in my office talking to my computer screen. And my wife came up and said, you know, it's ridiculous because you should put a microphone in front of your face because people might actually want to hear the crap that you have to say. She goes, I don't, but other people might. So that's why I'm still married. I'm married, okay? Not because she said that, but because we actually started TheoTrade. Because had I actually hung it up and retired, I don't think I'd be married anymore. I drive her completely insane. Anyway, the Ultima income generator alerts. The portfolio, no holds barred trading approach. You get to see everything. And you do get to see all the opening, closing, hedging transactions. You get to watch me discuss positions like never before. We even do weekly video updates, right? Weekly video updates. And now we have this TheoTheo small portfolio. So an account of $5,000, you get to track everything that we do. Now, there's one additional item today, okay? Ready? Here's the big additional item. Watch this carefully because we have never mentioned this before. Want to know why? Because we've never mentioned it before. We have a beginner's guide to Ultima trades. It's a mastermind, okay? If you went on our website right now, I'm just going to throw this out here. I'll explain what it is. If you went to our website right now, okay, and clicked get started, we charge $1,000 for the mastermind, okay? Today, those of you actually enrolled today, it's free. It starts tomorrow. Expert guidance. It's Brandon Chapman. Brandon Chapman has worked with me for the better part of almost 20 years. Industry expert with a vast experience in Ultima. Okay, he's going to guide you through Ultima trading. So imagine that we're not just going to give you alerts. Okay, we're not just going to give you all the classes. You get a mastermind. Okay, it's weekly sessions. I'll go through all the. Okay, it's Q&A. You have the opportunity to ask questions, clarify any doubts about Ultima trades. Skill building. The mastermind focuses on building your skills and confidence, turning you into a much more proficient trader. And it's a supportive community. You're going to be a part of a very small group of like-minded individuals, all coming up through the system at the same time, share experiences, learn from other, build your network. And again, I want to reiterate, right? If you signed up on here, okay, you can see it starts, all right, July 13th. This is it. It's on tomorrow. It is 6 weeks, okay? And it is to get you immediately up to speed on Ultima. We have just started this. We're providing it right now because he's got a much smaller session. It's summer. It's a little more quiet. He's got a smaller session. And we literally, right off the cuff today, decided everybody that signs up today for this, okay, today and pretty much today only, you're in. You're into it because we charge $1,000 on our site for it. And people want to know what's not included. This is being included now. It's $1,000 value in there. Okay. You don't have to do anything else. We'll just send you all the links to it. It's good. But that bonus is part of this. And I want to be clear, it's still $297. Okay. And you get the 6 weeks of Brandon Chapman. Okay. When I say one-to-one support, there's nothing like that. There's also a 90-day money back guarantee. Okay. At any point in the next 90 days, if you're not satisfied, just go to support@theotrade.com. I want to make it like as easy as for people as possible. As I say, I want to make sure that everybody that's here wants to be here. Okay, even after going through the mastermind, after listening to all the classes, after even consuming some of our trades, if it's not for you, please let us know. Get you $297 back. There's no excuses, no questions. By the way, you don't have to call us. You don't have to send a certified letter. We don't care, right? And there's absolutely no stipulations to the money back guarantee. There's no stipulations. It's amazing because some people are like, I am not happy. Okay, we got it. Here's your money. It's 297 bucks. Okay, open up a spot for somebody else. We got it. It's okay. Not everybody is suited for trading, right? But if you think it's for you, you want to try it, hop in there. It's 297 bucks. Okay, and I think you guys will really enjoy it. Now, everything is being done on mobile application too. Like you used to have to sit in front of computer screens. Like I've been doing this now for 25 years, sit in front of computer screens all day. It's all on mobile, okay? You know, you don't even have to have an iPad anymore. You can do it literally, okay, off of an iPhone, off of an Android. That's what it is. Again, there's a money back guarantee. It's all done on mobile. This is what the portfolio looks like, as we showed you moments ago. Okay. And everybody wants to know last year, by the way, last year, this, okay, is in the midst of heavy volatility. That's good. 56.6% last year is spectacular. Okay. That's spectacular. That's a return on a $50,000 account, which breaks down to $28,314.75. Okay. In addition to all of this, okay, okay, we also do weekly videos. The weekly videos are update videos, right? So once a week on a Friday, I record a 12-minute video. It's only 12 minutes and it gets you up to speed. Okay, this is why I did this trade. This is what I was thinking. Okay, this is the hedge that we're using right now. All the little nuances that you need just for you to actually understand conceptually. You don't have to listen to the 12-minute video, but it really, I think, gets you into the mindset. Why did he do that? Why did he do that? Okay, because I always have a reason for everything. I don't just trade for trade. Like today, I executed. I executed today because we broke outside of the expected move in the SPX. Okay, and that is gold, Jerry. It's gold. You do not get moves like we're seeing right now all that often. This is in the SPX. Okay, and in the SPX, I'm just going to show you why I did a trade today, because we broke outside the expected move. We, like you can see the highlighted, when we break outside the expected move, I execute, right? That's the kind of thing I'll put in the video. This is what trade alerts look like. I know I went back to May 30th anyway, closing for 50% profit, right? Buy to close. This is what a text message looks like. And you go, I don't understand the verbiage in here. You will. Okay, you can actually tune into a quick class and actually learn a little bit of the verbiage in there, right? Another text alert, yet another text alert. This one on June 6th. Okay, closing for 50% profit. Again, this one is selling. Okay, what does it say? Ultima TheoTheo small portfolio, selling a 3,600 put for a $17 credit. Okay, that's what text messages though effectively look like. Here, what our members are saying. Kirk Knight, consistent value education with remarkable return on investment, right? This is somebody that's been a member for 2.5 years. Consistent valuable education that is supported by ongoing basis for us users long-term with very successful results. I've been a member of TheoTrade and a student of several mentorships they offer for about 2.5 years, and I'm quite satisfied. They actually enthusiastic about the programs. Okay, have seen some reviews where it's clear objective to those, clear. The objective of those reviews was to find something wrong and whine about the cost. Too bad for those reviewers. Okay, they're obviously missing the point that TheoTrade program is very inexpensive for what it provides, and the results pay for the costs involved many times over. Okay, another one from Paul M. The education is second to none. And if you're a novice when it comes to markets and trading, the training material is superb, professional, organized, written in plain English. The professionals at TheoTrade have all the content, okay, that can get you whatever level you want your trading, investing, education, skill to, okay? Been a member for 3 years and I'm still growing and learning, really enjoying the experience. All right, here's another one that came in on an email. I want to thank all the different staff points of view. This year, I did more of what works and less of what didn't. Thanks to your selling premium and inflection point spread hedges, took $12,000 to over $32,000 in 18 months. Okay, I'm doing your method. Thanks again, right? Look, get into TheoTrade now. I'm going to work with you directly. There are 30 spots on the TheoTrade riskless deal. What that basically implies, okay, the money back guarantee, there are 30 spots. The other thing is there's only 30 spots available in the mentorship. The mentorship that kicks off tomorrow with Brandon Chapman. It's got 30 spots in it, period. All right. We're not opening it up to anymore. We can't open it up to anymore. All right. It's summer. It's slow, but that is it. We cap. All right. This is the only presentation that we have done to put people into that mentorship. Okay. Look, we'll give you unlimited email mentoring. You're getting Brandon Chapman for 6 weeks to get you ramped up. It's a $297 riskless offer. We have never done the mentorship with this ever. Okay. I don't know if we'll ever do it again. It's a slower time of the year. People go on vacation and so forth. Everything and every nuance is recorded, right? Every nuance is recorded. I was talking about text messages. We're now using a 602 area code. Look, enroll now. It's TheoTrade.com/SKU. Again, TheoTrade.com/SKU. And I'll remind each and every one of you, as you are enrolling for this, okay, you immediately are granted access to a $1,000 mentorship. Okay. And again, when I say get started now, you don't have to know anything about the mentorship. You're in. It starts tomorrow. You're like, I can't make it tomorrow live. It's okay. It's going to be recorded. Right. And you can still email him back and forth. Remember to put your phone number in there. Right. Again, what our members are saying. Been a successful subscriber for about 4 years. This is the only organization that has actually taught me how to consistently make money in the markets. Okay, I'm going to answer a couple of questions. But before I do, I'm going to answer some general questions. Just going to show you a little bit about TheoTrade. Okay, this is TheoTrade. It is live and uncut. Right, when I say TheoTrade, this is actually the TheoTrade site. This right here is the chat room. Now I just have this paused right now, but okay, this is actually live video chat. We stream live, okay, for 6.5 hours every single trading day. You get access to everything, classes, coaching. Somebody says, I know nothing about markets. Start here. What's the start here? Start here is actually walking you through, okay, options 101, options 201. You get access to the entire archive of classes that we've done, okay, for the last 7 years. So this is 7 years of archives, option classes, option newbie classes, technical analysis, stock classes, day trading. Okay. It's all in here. Trend trading, pairs trading. Okay. I'm going to just be frank. We went out of our way again. We have myself plus 7 other instructors. Okay. And we went out of our way to try to find differing opinions and different angles. And there's a day trader and again and a futures trader and somebody that's purely into technical analysis and charts. Hey, Jeff Bierman. For those of you who have no idea who Jeff Bierman is, let me explain this. Okay, Jeff Bierman built most of the thinkorswim charts. Thinkorswim charts, that's the premier charting platform in the entire industry, bar none. If you find a better charting platform, like there's some free stuff out there that's pretty good, but thinkorswim is still by far and away, it's like a cut above everything. Yeah, Jeff actually built over half the studies in here, built the look, the feel, the everything, okay, inside of the thinkorswim charts, right? He's now also a professor of finance and he moonlights with us. But you get access to his classes. You get access to my classes, catapult trading, flyby, Z-spreads, Blake Young, okay, inflection point, income accelerator. Here's the ultimate income generator class, right? Gamma irons, controlling your risk, volatility crash course. You go, whoa, it's a little overwhelming, isn't it? It's $297, okay? I mean, our feeling is we would rather overwhelm rather than underwhelm. And you come here and you're granted access to literally everything. And you get to kind of pick and choose, right? What you want to consume, all right? But you could be busy in there for years, literally for years. There's everything you're going to need, and that's one thing that I always try to stress. By the way, to let you guys know, there are 30 riskless spots available, okay? I'll read off a handful of names as you guys are enrolling. It takes me about 6 to 7 minutes before I see your name populate, but just to confirm that we see you enrolling, Paul L from Florida, Bart B from California. Again, these are names that I can see have now enrolled. Okay, so we see you, and it can take a few more minutes for us to actually send you the username and password. So Paul L from Florida, Bart B from California, Donald M. from Washington, Thomas R. from Texas, Tim K. from Florida, Frederick C. from New Jersey, Howard G. from Virginia, James K. from Texas. It's just the first batch of names that's come through. I think that's about 8 to 9 people in there. And again, it leaves about 20 riskless spots left. As I said, though, it takes us about 6 or 7 minutes before we can actually see in our system those names populate. So I'm just going to read off some general Q&A over here, then answer a couple of specific questions, and we'll kind of wrap things up over here. And again, if you guys, as you're enrolling here, have questions, hit us in the chat rooms. Okay, we're here to answer questions. Additionally here, you can come right in here. As I said, there's 30 riskless spots. Stacy is there to answer. You can actually chat directly with us, okay, in real time here. So any questions you have, it's right in the enrollment. Again, this is TheoTrade.com/SKU. TheoTrade.com/SKU. S is in Sam, K is in Kick, E is in Echo, W. All right, so let me get to some of those specific questions over here. Look, everybody always asks, what do I need to get started? We have everything. I mean, really, like, I don't want people to feel like they got to go out and buy a new laptop. They got to buy this. Look, most of the stuff that's good these days, it runs off of, like, mobile apps and so forth. In fact, I argue that if you guys have ever been to a couple of the big brokerage firms, including, thinkorswim, which is now Charles Schwab, and TastyTrade, their iPad application and Android application is better, in my opinion, okay, than the desktop stuff. It's incredible. Their stuff, I mean, like TastyTrade in particular, their mobile application, phenomenal. Like, I can do everything I need to do on the mobile applications these days. You basically need a mobile device to get started. We give you everything else, okay? Number 2, this is not a membership. We don't do auto renewals, okay? That was a big business decision for us, but people didn't like it. Oh, charge me $297. I didn't expect it to do. Look, we will send you an email and say, hey, you want to do this again? Like, if you liked the last 3 months, we want to do it again. You go, yes. So we go, okay, here's the charge, right? So we don't auto renew, we don't auto bill. But number 3, we give you weekly update videos, just a 12-minute video that encompasses everything I did in terms of alerts. And if I did nothing that week, and it happens sometimes, especially during, like, July 4th week, it was a weird week last week, right? It's like 3.5 trading days. I didn't do anything, okay? But then we just basically say, this is why I didn't do anything, okay? It's still 12 minutes. It's usually about a 12-minute video. It just gives you insights to the marketplace, what I'm doing, what I'm not doing. All right, number 4, we give you access, okay, to TheoTrade Mobile. What's TheoTrade Mobile? TheoTrade Mobile, it's our mobile application. So we built our own mobile application. And we did that because we knew that, like, we have a lot of clients in Singapore, okay? We have a lot of clients in Australia. I know it sounds weird, but you can't send a text message from, like, US to Australia. So we had to use push notification. So that's one of the reasons we did it. The other thing is, also, I lived in Arizona until 2020. Like, I stayed in Arizona, lived in Arizona. We moved, wife, kids, everything. We moved here. We live now in St. Croix in the US Virgin Islands. I still go back to Arizona. I'm in Arizona probably about 4 months out of the year. Okay. I don't know why. There's too many people there now, but I actually like it there. Anyway, I go back and forth, but when we're here on the island, we too, like, sometimes don't get, notification. We use push notification. We also use text messaging. And when we message you in text message, we actually use an Arizona, mobile number now. And we do that because it's the area code from here in the Virgin Islands, like, nobody knows it. It's like a 340 area code. It's weird. So we use now a 602 number. So again, add your cell phone when enrolling, receive alerts. Number 6, you can email us anytime, receive a response within 24 hours. I am emphatic about that as well. You can send us trade related questions. So if you have a question that says, what am I doing in this trade? I know that there's all kinds of educational services out there. And they say, well, I can't answer real trade related questions. Why? Okay, why can't they? I want a good reason. Well, there's liability. No, there's not. Okay, look, I've held every brokerage license pretty much imaginable. I've had my Series 3 futures, my Series 4, which is principal options, my Series 7, which is a broker dealer, my Series 24, okay, which is a principal broker dealer. Then I've had, okay, my Series 66, which is a 65 combined with a 63. I even went to Canada and did a couple of Canadian licenses, and I did an Australian license. Okay, you want fries with that? I was a good test taker, all right, man. I don't have any licenses anymore, but I can tell you right now, we can answer all the emails we want. So ask trade-related questions. By the way, a couple more names are coming through here. David N. from Florida, Michael T. from California, Bernie P. from Canada, Greg T. from New York, and Michael K. from New Hampshire. As I said, apologize, it takes about maybe 6 minutes before I actually see your name. So it looks like we're up to about 15, so we're about halfway home, okay? There's, again, 30 riskless spots available, and there's only 30 spots available in the mentorship, okay? Look, variations of the trades that we do are available inside of an IRA. Okay? If you've got an IRA, please don't worry about it. You can do this in an IRA. We can also help you get approved for option trading, okay? And I'm very, I guess, specific about this. The number of brokerage firms that lets you do everything you want to do is a little bit limited. It's okay. You know, one really cool thing, it looks like right around the beginning of 2024, if you're Canadian, listen up, Canadian, okay? Canadian brokerage firms better watch out. Tasty Trade is coming to Canada. Tasty Trade is actually, okay, partly owned, well, it is owned now by IG. IG is actually a British firm, okay, part of the Commonwealth. They're coming into Canada, and it's going to change the entire Canadian brokerage industry overnight. So that's going to be a positive thing. A few more names: Robert O. from Michigan, James S. from Florida. Again, there's 30 riskless spots. Look, get results, take action, roll for TheoTrade now. There's no risk to you. We're going to leave it at that. Again, I want to make sure that we got everybody's questions answered in here. I appreciate everybody actually tuning in. Obviously went way over in time, but the most important thing is that we do get those questions answered for you. So, again, if you have any more questions, we'll be live inside of the chat room over here. You can also hit us right here. As I said, there's a handful now of these riskless spots left as I'm kind of reading off some of the names. If I missed a few of the names, okay, again, it takes me a couple of moments. I see one more, Robert H. from Illinois, right? It takes me a few names to actually, or a few minutes to see those names. Anyway, hit theotrade.com/SKU. You can actually hit us with questions here or directly inside of the chat room. Thanks everybody for tuning in today. Have a wonderful afternoon, and see you in TheoTrade. Bye-bye.